All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 14th, 2022. So, got some remodeling going on in the house. We're broadcasting from the sunroom instead of the man cave in the basement. So, this is the flashcard that I'm going to use tomorrow at the Quantum Storytelling annual conference, where I'm going to talk about how we've learned to use the sacred story space of true storytelling circles to improve the way that we conduct leadership education, trading education, and combine the power of Fletcher's creativity story science with true storytelling to help master our trading practice. You see the principles of true storytelling there: the truth, making space, adjusting plots, working on timing, helping things along, staging, and reflection. Those are all the parts and pieces of true storytelling. And then you see the notions of safety, trust, truth in the sacred story space lead to the opportunities for collaboration and development. And that from that sacred story space, we end up getting very powerful collaborative workshops and the development of tools through artifacts, and that this approach to collaborative learning works whether you're talking about soccer kids, soldiers that I teach for the Army, our traders, or leader development around the world. This is the result of like 3 years of weekly true storytelling circles. So almost 200 sessions that operate off a common set of agreements about how to behave inside that sacred story space, and the common experience that we have about that seems to apply no matter who the demographic is or what the particular focus of the stories are. Whether we're working on understanding a deep theme, a story seed, or whether we're just working on our own personal work in progress, that we're really developing some tremendous payoffs. So I'll talk about that tomorrow in that annual workshop, where they've appointed me as an associate editor of their new academic journal. So I have that to look forward to, which is nice. All right, so moving on. We're going to start with tonight's sniper trade of the day. And here's what I noticed on this particular symbol was that this was yesterday's close, and this is on a 3-minute. These are 3-minute charts, and so it opened here at the top of that blue line. And these little these yellow boxes are R10 MMRBs, and so this was that tension. This was the OR3 original candle, and I noticed, it from the open it sold off immediately 1 MMRB, and I considered going short. I wanted to see the 3-minute candle. Then it went another one, and then it went a third one, and the rest of the market was not particularly healthy, and this was one of the worst symbols. So I just held my nose and entered inside the first 3-minute bar after having watched it just fall 4 MMRBs. And so this is the principle behind the hybrid frog, in which you simply take the open and you take your MMRB and you bracket the open, and then you decide to go long if it breaks out, or you go short if it breaks down, and then you use that center line where it opened as the risk box. And then your job is, if it goes short, is to get your stop out of that risk area quickly to lock in the no lose plus dinner for 2, or if you're going long, is to get that stop above your entry and get no lose plus dinner for 2. So this is a case where if I had done that strategy, this one moved 1, 2, 3, 4 MMRBs in the first 3 minutes of the move. And that's the idea behind the hybrid frog, because one of the things that we know is that 2 times out of 5, 40% of the time, the open is within 10% of the high or low of the day. Well, what does that mean? What that means is that 2 days a week, 2 out of 5, you're going to get an opening, and then it's going to make a large directional move, and then when you find out what the size of that move was and you break it into 10% increments, 2 times out of 5, that opening is going to be within 10% of the daily range near that opening. So you're going to get large directional moves where you get a massively good payoff 2 out of 5 times. And this is an example of one of those where that first move happens already right within the first 3 minutes. And so the idea behind the hybrid frog, which is a form of leapfrog, in the leapfrog, that was in generation 1.0 of the frog, in which we had leapfrogs, quick frogs, and slow frogs. In version 1.0 of the frog system, we were using full frog boxes to bracket the open. And in the slow frog, from the open, you had to wait 1 hour and then see where price was, and then determine if it had moved a frog box from the open, then you could get long. And so sometimes waiting that hour would cause you to miss these large potential moves. The idea of waiting 1 hour was that 90% of the time, the high or the low of the day is made within the first hour. So the idea would be 9 times out of 10, when you look back from the first hour, the lowest low of the first hour or the highest high of the first hour, one of those two is going to actually be the high or the low of the day, which means that you've seen the anchor point in the first hour, and then the move away from that is the one that the frog is going to get. But many times, like today, that move happens within the first hour, and you can't get it because you're supposed to wait for a full hour in the slow frog. So what we did instead was we then developed the quick frog, which said instead of waiting that full 1 hour, let's just wait a half an hour and then make a decision, and then we may be able to get in front of that move as it's starting to leave the station. And then we said, well, if you're going to go at the 30-minute mark instead of whatever, why not just put a bracket on that open, and then as soon as it breaks out a frog box, then you could go. And then we realized that you could reduce the size of the frog box as much as down to about 1/3, which is approximately what that R10 is. It's approximately 1/3. So instead of waiting a full frog box move, you could just give it an MMRB, quickly get your stop to no lose, and then you'd have 2R in hand at a time when in the frog rules you were just starting to open. You'd already have 2R in hand because you risked 1, you got 1 and 2, and now instead of entering, you've already got 2R in hand. So in generation 1.0 of the frog rules, which we teach in the day trading course, and it's still a valid system, we've moved towards the hybrid frog strategy, which gives you the opportunity to use a much reduced risk box, or the MMRB, and it allows you to have simple rules to bracket the open, and now you can go. So that's the idea behind the hybrid frog. Now, what I'm going to demonstrate here, what I've been demonstrating lately these last 3 or 5 months with the sniper, has been the idea of the OR3, which is a different framing of the opening. It says wait for the first 3-minute bar to establish a high and a low, and then whenever wherever price is inside here, when it breaks out north of the high of the opening 3 minutes, then you could just get long with an MMRB, a tight risk box, but you give it the first 3 minutes to clear the opening deck from all the overnight orders. Or if it breaks below the low of the 3 minutes, then you could be short, but once again with a much reduced risk box. So that's a variation on how to get into those trades, but it is similar to the hybrid frog in the sense that it is using a much reduced MMRB. And so either one of those I find is a valid way to get into positions. Like from the opening, if you had put the hybrid frog on with an MMRB, you'd have taken this entry and then quickly you'd have 3 or 4R in hand. As you know, there have been other times when you get that first entry and then it gyrates around in here and you get stopped out and chewed up a little bit. So the OR3 is an effort to avoid some of that early morning chop by establishing a 3-minute boundary on the opening range. So I've been adopting the OR3, and that caused me to not take that first MMRB or the second one or the third one. By this time, this thing was running away so much that I just held my nose and made that entry, not waiting for the 3-minute bar to finish. I just decided I was going to do that. And then my idea is, how quickly can I get my stop down to no lose plus dinner for 2 so that I could lock in that gain? Well, by the time the opening 3 minutes had occurred, I could have already done that and locked in that little wedge within the first minute of the trade and eliminated my risk altogether. Now, if I'm willing to let this come back, take me out, and then just capture that little piece and make money, if that feels good, you can do that. Just so that you are read in on what we've got. Let me know if that made sense to you guys. Sure hope I recorded that. Yeah, we're good. All right. So here we are in that trade. Second bar, third bar. Now by the fourth bar, so these next couple bars just kind of monkeyed around. By the fourth bar, it actually now breaks below that opening range 3. So if you had waited for the OR3, you'd actually be short here. And then that next move is down to here. And that's enough of a move for you to get your stop to here. Now, because I was short from here, I can get my stop out before that entry ever occurred. But in this case, either one of those entries gets you into a winning position on the short side. All right, so let's see what we got here. Now, I noticed, I didn't mean to accelerate that much, but there we are. So this entry, from here, gets down to a maximum favorable excursion down at this region, and then it starts to reverse back up. That's enough for the R10 to reverse, cross the baby dragon, and start moving up the stack. I decide to just play a standard exit off of the PSAR, and I take that gain. So for 1 unit of risk, we get about 1.5. So we get about 1.5 R. I felt like it gave back over an R, or it gave back about an R from this maximum excursion. So that feels like a reasonable way to get in. because of this harsh sell-off and the fact that in those 8 bars it did not fail anymore, but reversed enough to take this out. This felt like an SSC. So this feels like an SSC entry, PSAR reversal, standard risk box, and I'm looking for it to get back up to, I'd like to see it get back up to the yesterday's close. That would be an amazing trade. By the same token, I'm willing to get short if it goes, turn that a little bit, my mouse pad was off. If it gets below that R10, I'm ready to get short on a collapsing dragon. So that's the trade frame that's in play. Check or hold. So this one fails to follow through. This thing is supposed to work right away. This thing is supposed to just go. Or if I go diagonal, it's supposed to go. It did not. It rolled over, came through the dragon. So I just get out here. Instead of waiting for a full 1-hour loss, I just take a 0.5 minus 0.5 loss, and I stop and reverse. Why? Because the big money was here, and this thing just failed, and now it's doing this. And so instead of waiting for a full collapsing dragon, I just take a stop and reverse right there. Check or hold. So I just get short on it right away. Eat the half an hour loss and then get short. It sells off and gets down vicinity, that key price level here, but it does not fail any further, and now it's starting to reverse. Excuse me. So at this point, I'm willing to say, let me take my risk and get my risk out of there, and just try to lock in that little wedge of no lose, get something back, especially to pay for that half an hour loss that we just had there. So that's my thought on this. Now, if this continues to just fail right here, then everything's good. But I don't want to let this thing come all the way back through here and then turn it into a 1-hour loss, especially when I was almost 1 hour up earlier in the trade. It just kind of meanders along, and the R10 crosses the dragon. Now, this is not a runaway upside move, but by this time the R10 had started to cross the dragon, and that was enough, and I wanted to lock in a half an hour to, really to pay for that thing. And I can see that this PSAR is continuing to drift, and so the R10 was going to get me out up in here anyway. So I'll just take that, and then that pays for the previous loss. That's how I kind of clear the deck. It continues on, and now because it failed to fail further, because this did not fail, but in fact is going up, I take the PSAR flip and just re-enter long, take my standard risk box, and let's see what happens. Nothing. So now, after that early morning rush, it's had nothing, nothing, nothing. So I'm not in a hurry to stop and reverse or do whatever. I just want to let it develop a little more because it's turning into a sideways quiet channel. Now I decide it's had enough time to settle down. It did not go higher. It gave me actually a lower high, and it crossed the dragon, so I'd take it short. and now I'm still aligned with the major move of the day. It had all of this space in here to go and recover, and it didn't, and it's starting to roll over. So that's why I'm short. Standard risk, and then that fails right away. So I say, well, in for a penny, in for a pound, stop and reverse. Starts to roll over, doesn't feel very good. Fed's getting closer, so I'll just take the half an hour win. And then instead of getting short right away, I felt like I needed some more. Instead of taking that short, let me get some clarity on this. And now it had fallen this far. So instead of getting it where on a better day, maybe I get there, I take it here before it becomes a full collapsing dragon. So I get short, standard risk box. It fails quickly, then starts to reverse. I'm already not liking this thing. It's like, God dang it. Another one of these. No, it still worked. Now we're getting close to the Fed. It starts to narrow. Let me just go ahead. It PSAR flips. Let me take the 1 hour win while I can and try to get something out of this and salvage something out of that day. So that's +1. And now we're in the last half hour of the day, so I just leave it alone. So there was basically not much follow through today. This is that first move out of the gate, which is why that hybrid frog or OR3 becomes attractive. Instead of waiting, a full half hour. See, if you wait a full half hour from the open, you can't even trade until about here, and then you don't get any of that. And then if you wait for the full hour, you're really getting nothing out of this day except for that last little piece here. So the idea of going sooner and with smaller risk boxes now gives you if you can be quick and adaptive, it gives you a chance to get some of those early morning moves on high volatility days. So that's the sniper trade of the day, and that was in U.S. Steel. Standard Steel Company move. All right, next up. This is the 30-minute bars. And this was today's move. The S&P gives you this, a big sell-off, and then back here, so it nets a sell-off. This was disappointing because you have a lower high in the peak of the dragon, so that's not good. It broke through yesterday's low. That's not good. And so even though it recovered a little bit, this still sets it up for big weakness tomorrow. And if it breaks through here and the 5-day low and the 10-day low, pretty quickly we're back to 380. On the up-hand side, it's got to get above that's about 404 and 406. It's not interesting until it gets above here. Then if it breaks above the 10-day high, that's really where it's free and clear. So tomorrow should be an interesting one. There's a sharp moves in either direction, just waiting. When we go to the daily charts, you'll see kind of the same thing. That yesterday's big gap up opening, which couldn't hold, is it continued the slide, and so it's all the way back to last week's normal price around 400, and now we're in a critical state ready to go in either direction with clear markers for targets on the upside and the downside. So critical state, ready to go either direction tomorrow, a trader's market in sideways normal conditions. And on the long term, on the 150-day look back, you can see that we're kind of right back in the midpoint of this 150-day range. That's our 150-day look back. There's the 150-day high, the 150-day low. We're just over the halfway point and ready to go large in either direction. Typical behavior in a sideways market. Look how choppy this is becoming. Whereas the move off the bottom, that first move and second move were decisive. It's now just kind of losing its momentum and getting choppy as people wait for somebody else to take the leadership role. Sector performance. We'll take a look at the downside first. So here's our S&P at minus 0.6. The Russell and the Qs were weaker. Diamonds were a little stronger. Losing positions in real estate, ARC Genomics, and emerging markets, or I'm sorry, Mexico, down to 0.37. Then more weakness in consumer discretionary, the FANGs and S&P Tech, down to 0.84. More weakness in lithium, ARC Innovation, materials, and finance, down to 1.25. Big weakness in Tesla, once again, minus 2.58. It's now down to 156. And I think was that the low of the day? No, there was a few more that were weaker. That was VIX was off 3.4. That's actually favorable for tomorrow. Marijuana continues its slide, minus 5.89. Lots of individual companies that were underneath the S&P baseline. So there is, here's your metals: U.S. Steel, Alcoa, and Cliff. So all of the metals were below their material sector and were well below the S&P. So the metals momentum is down. And then in the semiconductors, you've got NVIDIA, Intel, and Texas Instruments. Again, all of the semiconductors are down. Texas Instruments, Intel, NVIDIA. And they were worse than NASDAQ Tech and S&P Tech. So those were, clearly the semis were getting sold. In addition, you got PayPal, Apple, Rivian, Robinhood, all weaker. Now, to the upside, we've got, again, the S&P baseline at minus 0.6. You have this stack of uranium, wheat and precious metals, commercial real estate, the two lumbers, Brazil, agriculture, and staples that get us up to flat here at 0.07. Here's the boundary between winners and losers. To the upside, you had Ethereum, Squarespace, Bitcoin, biotech, Aussie dollar, clean energy, blended commodities, and oil up to 2.3. Coinbase, winner for the day at 3.9. Microsoft still in good shape at 0.12 compared to the S&P and then the techs. Microsoft has the juice, and Microsoft is better than Apple, which was way down the stack. So that one, Microsoft continues to be a stock of interest in my view. The best index today, Treasuries, up to 108, showing some strength. All right, let's take a look at the traders today. This is Agnieszka. So she had a really good day yesterday in Canadian dollar and Japan, but this got all chopped up in here in anticipation of the Fed, and that's what trading in the channel kind of looks like. I like this, the lower highs and the dragon and then the breakdown. I like the short. I think when that doesn't work right away, you might just scratch that at the edge of the dragon or when it leaves the dragon instead of letting it become a full loss. Then the stop and reverse long fails. This could have been short when it came out of the dragon, but this is just getting chopped around. You're taking fractional losses, and it wasn't until just before the Fed that you got kind of back in the game. And then this is what happened during the Fed, and it was hard to play that one. So this was just a tough day. Yesterday's 5R gave back 2 today. But those are well disciplined. Nothing to fear there. Here's Nolan with Tesla. Scratches for the day. We're missing the mover when it moves. Missing the continuation play. I like getting paid to pay for some of those losses, but you got to kind of stay with it. This one looks a little premature to me. I mean, you had here's the OR3. You front run it a little bit. It sold off and recovered. That would have been hard to take. I like the short because it failed and it rolled over, and then price and the R10 leave the dragon. That's a perfect short, and you got paid. I like that. I like your patience on this one. We might have been short here and then scratched instead of losing 0.6, and then the re-entry here. When you got the dragon down, it fails again. It can't even get through the PSAR or the VWAP. Either one of those is legitimate shorts, and that would have paid off big. This is a perfect SSC. So out of it at scratch, good lessons, didn't cost you anything. Learning to trade. Yeah, this felt like, hey, would you rather lose 0.25? No. This was a no lose plus dinner for 2 and it got paid. The re-entry was still pretty good. I mean, you waited for it to recover and then resume. That's pretty good getting paid for 1. Good discipline. It held the PSAR. It held the PSAR. It's above the VWAP. It's getting close to the Fed, so you took a quick scratch. If you take the same pattern here that you took here, you get paid well. But still, take 0.5 instead of fighting the Fed in here. If you don't want half an hour, send it to me. That's good work. So that was Microsoft before the Fed. Microsoft after the Fed announcement, when it all sort of settles out, he's able to pull in the PSAR flip after the harsh sell-off. That gives you an SSC. So there's an SSC right there. Gets paid, +1. We might have tried sooner, but I don't mind waiting for the VWAP to cross, and then it comes back. Instead of this big run-up, you still preserved at least a 0. So +1, and that looks pretty good. Devon Energy, yoicks. This was Hispanic control. You're looking at Tesla. Now, the only thing I will say is that energy has been on the move, and so this big gap up and roll over. The triggers are, you want alerts on R10 crosses the baby dragon, departs the dragon or PSAR flip, or hits the PSAR, and the PSAR flip. That's a screaming short right there. And that's a screaming second position. This would be a 1, 2, 3 exit. That's a PSAR exit. That's good. That's a good effort. That was the indicated continuation, which would have been paid. So some learning points in there. Find the movers. Use alerts to trigger your attention. Learn to make smaller charts with watching 4 to 6 charts at once. So here's Satya with Devon. Now Devon, he's able to get that same trade we just looked at. He exited early and then realized it was continuing, so he got the re-entry on the continuation, got paid. There was another re-entry continuation which would have gotten paid. Beautiful SSC, half and half. I like the short that got paid, and that's a reasonable effort. And then don't trade in here as it's approaching the Fed. So that's 4R and Devon. That's how you do it. Very nice. Luke, on the euro dollar, gets a -1 on this one, 1.3 on, or 2.3 on this one with the potential. That's the 2-hour battle drill, which would have paid off, which you should have gotten out here. If you put that second position on, getting out here is indicated. This one, I like the short. Could we maybe have gotten it in here when the PSAR flipped? Maybe. But that's still worth a shot. So is this one, because you're getting the drag and rolling over. Still, we'll take home 0.6 on that one. That's fine. He's working on learning a new symbol. And then in the Aussie dollar, the 5-minute Aussie, he keeps. There's the breakout. A little slow getting in. Maybe stuck around a little too long, but it's only half an hour loss, so we can live with that. Another quick micro loss. That was the pure play on the PSAR flip. That's a reasonable effort to wait for it to break above the emerging dragon. That's such a narrow range. You're not really giving back much by entering here rather than there. That gets paid. The continuation would have been very attractive. If you take that position, then, and you get this peak, you got to take like a 2-bar low or exit here instead of here. Even if you don't take that one, I think you gave back too much on here. But we'll still take 1.3, which was 2 for the day. Looks pretty good. Quick look at the reports for the day now. Dashboard number 1, sideways normal, stable. Risk on is still authorized. The staples like Merck, Johnson & Johnson, Pfizer, Procter, and Koch, that's Pfizer, Procter and Koch, that's all conservative staples. Tesla and the metals and Intel all getting smashed for your directional trades. Some clear winners and losers today. Tesla continuing to suffer. Merck continuing to make gains on every time frame from 10 days out to 6-month new highs. Pfizer also making gains in the healthcare sector. Alcoa, Apple suffering. In the ETF tactical, still quite a few very favorable auto framers. Breakdown in Mexico, breakdown in Latin America. Oil still on the move up. Standard work for the auto framer and the squeezes. Very few squeezes today, although Tesla was a squeeze. No Godzillas today in the tactical set. In the S&P, there's 4. Tesla still on a Godzilla, just proven that he finds, the king of the monsters finds good targets. Tesla. Only a few symbols more than 2 sigma on the Z1 score. 3 are enraged, green and green. Whoa, sorry about that. Didn't mean to get that large. The volatility in our tactical symbol, there's not a lot of volatility anywhere in this whole stack. Not much volatility in our tacticals, except marijuana, Brazil, and Tesla. Those should be your concentrations. If you're a volatility trader, you got to see those. Haves and have-nots. Johnson & Johnson, Merck, and Pfizer crushing it. And that's your health cares crushing it. Here's your weakness. Your Latin America, Brazil, Mexico. There's your weakness, Tesla. U.S. Steel, big loser today. All right, that's everything we got for today. We'll be prepared for them tomorrow. Let's go get them. Take good care.